go ahead and begin. Assalamu alaikum, and we always start with Bismillah. Today we are here for really an educational event. We're here to discuss, retirement, financing, and the bottom line is why a $3 million portfolio still may not feel like enough. This is specifically oriented for physicians, healthcare professionals, and the goal of it is that by the end of it, we should be asking ourselves, what's a better way to do things? Tonight's conversation is not about replacing traditional investing. It's truly about asking much deeper questions, right? And it's what actually creates retirement confidence. For some of us, we think growth, some of it is income, some is diversification, some tax efficiency. For me, peace of mind, and especially for all of us, it should also be value alignment. Realistically, for a good investment and for retirement confidence, we need to have a combination of all of these things. And we're going to talk about how we can, inshallah, get to those goals and those objectives with thinking outside of the box. Before we begin, I quickly do want to introduce myself. Some of you guys may already know me. Some are getting to know me, but I am a Michigan native, Detroit born. I'm a real estate operator here locally, and I am a broker and the founder of the Fajr Fund ecosystem. Some of the things that I've done thus far in my career, I currently have 15 million in properties under management. We've done $1 billion in sales through Amin Realty, and we do have the full vertical. So what that means is for real estate investors and people who've invested is that we focus on acquisitions, rehab, leasing, operations. And what we do primarily is focus on helping high net worth individuals, healthcare professionals, professionals in general, invest in real estate without actually having to be involved in real estate. Some of our core philosophies are around disciplined investing, income producing assets, long-term thinking strategies, and truly what makes us completely different from majority of the other companies available are that our investing strategy are very value aligned focused. So when we're investing, we think about how it's actually impactful, how we can be ethical in terms of our own standards and also religious standards as well. Before we continue on and I let Elden introduce himself, I have a question for the audience. And just out of curiosity, who has real estate here? Either as a primary homeowner or as an investor, feel free to drop me, anything like that in the group chat. That would be great. Just so we can kind of gauge the audience, or raise your hand as well. That works. All right, beautiful. So we've got some people here who have bought real estate or invested in real estate. All right, I'm gonna quickly let you introduce yourself, Elden. Elden is my co-host and our guest speaker today.
Assalamu alaikum wa rahmatullah. Thank you so much, Brother Nabil. Assalamu alaikum to your audience. It's a true pleasure to be part of the conversation that we're having this evening, one that's very important to our community. So my name is Elden, and I am also Detroit-based. Although I was not born in Detroit, my journey started in Bosnia, but since the move to the United States 30 years ago, Michigan has always been a home. I have been a financial advisor. I've been in the financial advisory industry for 2 decades now. And most of the things that I discuss with my clients, which you see on the screen in front of you, came as a result of that 20-year journey. Learning the trade just to be faced with the 2008 financial crisis, learning from human behavior during those very difficult and challenging months, watching individuals struggle and suffer, try to understand what's going on, but then also the growth period, the investment opportunities that followed, especially in the real estate environment following the 2008 and 2009 crisis, was very interesting. So 3 years ago, I did start Sterling Advisory Group, which is a Sharia-compliant advisory and portfolio management firm. My office is in Southfield. I do service the Muslim community pretty much in the entire country. And alhamdulillah, it's been a great ride, and I'm honored to be here today, and inshallah looking forward to contribute as much as I can to this conversation. So I'll turn it back to you, Brother Nabil.
Jazakallah for that introduction. Actually, it's very important that we have people that are in the financial advisory space that are Sharia compliant focused, that understand it themselves and can help and understand other people who care for that. So we definitely appreciate the work and the time you've taken out to be here with us today. So quick question for the audience. How many of you guys currently are working with a financial advisor or think you would need one, at one point or another? So I'm going to be the first to raise my hand. I know the space that I'm in very well, but I think definitely, especially when you're going into different fields, different sectors, just like when you go to, the doctor, if you have a, stomach issue, you go to someone that specializes in that, so on and so forth, right? So when you are doing financial investing or strategizing, it's definitely best to speak to someone who's in that space and has, inshallah, more experience and good experience that they can share with you. We're going to get right into it. You guys have seen the title, why a $3 million portfolio might not feel like enough for retirement. So I want to get right into it, right? For some of us here, a $3 million portfolio might sound huge. It might sound like, that's a lot of money. And the reality is it is. It's impressive. But it's not a matter of if it is impressive or not. The main question, the main thing that amount needs to solve is, does it replace income, flexibility, and peace of mind? Traditionally, when people are planning for their retirement, they buy, traditional stocks, they build a portfolio, and it's great, except when you look into, the exact functionality, and that's all you have invested in. Usually, a financial advisor or most retirement planning experts will suggest that whatever your amount is, you should be able to withdraw about 4% and live based on that. That should be sufficient for you to live your retirement. And 4% on a $3 million portfolio is about $120,000. That's before taxes, before inflation, before healthcare, before all the costs that come with life, right? And we're going to get into a little bit of what, the tax implications might be and the inflation is. But for the most part, for a lot of professionals like us, when you're coming from X amount of income and going down, you have to do a lot of adjustment and changes. For a lot of physicians, from what I recently just read, the average physician's income is around $240,000, and an average portfolio size is roughly around $3 million. So what that looks like once you actually retire is that your income is cut in half. Now, for a lot of people, if today our income cut in half, our lives would drastically change. So our goal is to, yes, have a large portfolio, but have it function in a way where we actually don't need to change anything. A lot of us are in this paradox where we feel like, we actually have everything if we list it out. But then again, sometimes we still feel stuck. You have great income, strong savings, retirement accounts are good, healthy, you've got advisors, you have professional status where, when people see you, they respect you, you've worked for your degree, yet it truly does not feel like freedom. And when I use that word freedom, probably different things are registering in all of our minds. That word freedom will have a different definition depending on who you are and what you think freedom looks like. For me, freedom is not needing to work. For me, having the time that God has given me to use the way I want. Some of us are working because we have to. Some of us are working because we want to make an impact. All of those different things are there. But truly, if you wanted to quit today, would you be able to? That's the question that I think a lot of us, can't positively say yes for. Traditionally, what our life and timeline looks like in our 30s, we're chasing growth, we're trying to build capital, maybe investing heavily in our portfolio, we're starting to think about it. Around 40s, you starting to ask more questions, understanding and seeing the world for what it is. Maybe you've been through some economic cycles, so you have a little bit of experience or firsthand witness that you can kind of see how things drastically change. Around the 50s, you truly start protecting. It's more about actually having assets that you can rely on, and you start thinking about that more and more. And then in your 60s, as you get closer to retirement, unfortunately for most people, right? Not everyone, but for most people, they just pray and hope that the market cooperates. And we're going to talk a little bit about why people are left with just praying and hoping, and how we can actually now, ahead of time, plan and prepare to have a different strategy and a better outcome, God willing. Now, I'm going to quickly, ask some questions that we all should be asking ourselves. Retirement shouldn't be about not only just not working, but that should translate to being able to maintain your lifestyle. You ask yourself, do I have dependable income? Can I continue to help family? If it's your own nuclear family or the friends back home or the relatives back home that you support, right? Because the reality is, a lot of us who are immigrants or come from families abroad, that is a huge portion. Not, I wouldn't say huge, that is a portion of where our income goes. I can think of a few families right now that truly are dependent on mine, my brothers, my fathers, my uncles, right? And when we get to retirement, imagine that feeling where you have to call them and say, you know what, I can no longer help you. And then even like the financial anxiety. You retire, you put in years of effort, being impactful, your career made a difference in people's lives, but at the end of it, you still feel stressed out. And then again, very important is, can your retirement plan withstand market downturns, right? Very important because, simply just speaking, we talked about a $3 million portfolio, but imagine a 10% adjustment to that in a negative way, right? The market goes down 10%. You've just lost 2.5 years of withdrawal. And that happens. And it has happened in the past, and it will happen, in the future. It doesn't mean that it won't bounce back, but these things do definitely happen, right? So those are the questions that we really want to ask ourselves. And kind of as we go through this, when you guys have the chances, like, feel free to ask questions. We're going to take stops and allow you guys to do that. But those are the questions that we truly need to ask ourselves, right? Now, when we are building a portfolio, there's a small concern that I have or I see with just having having all your eggs in a traditional portfolio. The usual psychology behind it is that you build it, your retirement arrives, and then you're actually selling it to live. So you really can't benefit from what your portfolio has grown to unless you're selling it. And then there are circumstances that, are beyond your control, right? You don't know when you need the money. It could be a scenario where, you have a family wedding that you need to pay for, or a trip that you have to go to, or it could be a medical bill that comes up. We cannot control that, right? And the reality is that we also can't control when it's a good time to take it from the market. The analogy I like to use is like, imagine you plant a tree, right? Most people, when they're planting a tree or a vegetable, they expect that once it's, matured, that I'm going to get, vegetable or fruit or something that's going to benefit from it. Unfortunately, if you have all of your capital in a traditional portfolio, there becomes a cannibalization problem. And I'm going to kind of explain what that means. Probably when you hear the word cannibalization, cannibalism, it kind of, reflects on negative things, all the horror stories that we can hear, humans eating humans, all these things. And I don't mean it to that extent. But what I mean by it is that actually, now that tree that you planted, the only way to benefit from it is by cutting that tree down, either branches or the whole thing, because it's not bearing fruit. So we need to try to create a way where when you get to that time for retirement, you have a tree that actually is bearing fruit, right? And I'm going to give you guys a quick example of someone that recently actually was thinking of investing in real estate. It was a very unique deal, right? And this gentleman wanted to invest about $200,000. A good portion of that was actually coming from their retirement savings. They were going to withdraw from their portfolio and invest. Unfortunately, most of us know, in the last 2 months, a lot has changed over the world, just economically and politically, with some of the wars going on. About 15 to 20% portfolio value has gone down. So this person just simply could not invest due to the fact that at that exact time, the portfolio value went down. So it didn't make sense for him to invest in that. Now, in his scenario, that's just an opportunity that was missed. But in other scenarios, it could be something that's, crucial, a medical bill, could be your daughter's wedding, whatever it is. And at that point, you necessarily don't have control. And it doesn't mean that when it goes down, it won't go back up. For the most part, Eldon will tell you that, these portfolios, they tend to overall grow. But it's the timing that we need to take into consideration and we need flexibility on. And to be very frank, actually, having your investment in traditional portfolio is probably one of the most aggressive ways to grow it, especially when done right. And then, with financial advice from people like Eldon, there's a way to do that and be ethical. And that's something that we, especially pretty much everyone here is a Muslim. Alhamdulillah, we have our own personal standards, but the, guideline, the lifestyle, the iman that we have dictates that we act in a certain way. And I'm going to kind of give some scenarios and some times that, things have actually changed in our lifetimes. I was pretty young in the dot-com crash, but as I got older and I started learning more about finances and getting into the investment world, our job is to learn and research these things to learn from it, right? There's a saying that history repeats itself if you don't learn from it. So our goal is not to, give you guys a reason for concern or fear, but it is to learn from it. Absolutely. 2000 to 2002, 49% decrease in market value. 2008 to 2009, it was a 57% reduction in value. One of the worst financial crises that the world and America has even seen, right? Even then, I was very young. I probably, was still running around on the streets trying to play basketball and get home before the lights came out. But we've seen how it affected our lives. And then, like the most recent, the COVID crash, right? Things did absolutely bounce back up. I think they bounced back up even stronger. And the portfolios probably have risen significantly since then, but 34% in 33 days. This was noted as the fastest crash in history. And in those situations, right, if you're at the age of retirement or around that time, the biggest question and concern that all of us will and should have is, what if I have to delay retirement because of the market? And that's something that many physicians and professionals carry, as a concern quietly. They don't often get to talk about it, or they don't know what to do. They just hope and pray, which is what we talked about in the 60s, right? That's what people do. They hope and pray that something like this doesn't happen at that time. But in reality, you guys can see in the last 20 some years, major shifts happened at least 3 times, right? And this here again is not to say that, hey, you should do this or that. It's to give you guys the education to be able to actually ask the good questions and the tough questions and get help from financial advisors and get help from, like-minded people and get opinion from others, right? Even with a stock portfolio, there are good stocks that can help negate some of these concerns, right? Like, a lot of people have heard of Coca-Cola. Warren Buffett is a huge advocate for it. I think a major portion of his investments are in this company. And it's because he understands the value of dividends, right? Anyone here familiar with dividend is or cash flow? Raise your hand, say aye. All right. So not a lot of responses. Dividends and cash flow. All right, Brother Fassi, I know you know it. But dividends and cash flow, what that translates to actually is that when I own something, while still owning it, it's paying me. That's the simple answer. And Coca-Cola does have 2 to 3% annual, dividends and share value or income that you can rely on. So currently, our goal shouldn't be just having a growth portfolio. The way I look at it is we do want ownership, we do want cash flow, we do want growth, also tax efficiency. There is no point in making a lot of money if you don't get to keep it. Especially in my business, in real estate and whatnot, we ask the question of less of how much did you make, but more of how much did you keep. So a quick comparison, if I made $200,000, but after everything, I only saved 10,000, right? Versus my brother who made $100,000, but saved $30,000, who's in a better financial position? Most people would think that 200K in income would translate to peace or safety, but it's not. It's actually what you get to take home, right? So those are the type of things that we want you guys to think about and actually, start asking more and more questions behind. Now, these are the two different types, of thinkings that most people have. Either it's traditional growth or income-oriented real estate. And there are pros and cons to both. They're not one is better than the other, or I should do this or that. The goal is that you truly understand what both of these are and how all of these actually play effect into your retirement. So traditional growth assets, the price appreciates over time. In some instances, significantly more than real estate in certain times. And another benefit to it is high liquidity, right? You can sell your shares whenever it is that you want. And then there are stocks that do give dividends, sometimes 2, sometimes 3%. I think that's on the highest end for stocks that have dividends. But for the most part, the bigger concerns are that it really requires selling to generate income. And then they're vulnerable to sequence of return risks, meaning things that are out of your control, things that are out of the company's control, right? And then you have income-oriented real estate. In income-oriented real estate, there is appreciation usually, similar to traditional growth assets, and there is usually ongoing cash flow. You can get monthly, quarterly, yearly income distributions, and a lot of the times 8% plus is very, very possible. So as an example, you invest $100,000, you're making $8,000 in cash flow while your $100,000 is growing. And then another huge component that's very misunderstood is the tax efficiency. There's very unique ways where not only will your asset pay you off on the front end, but it actually saves you money on the back end. And it also helps with these assets that you grow traditionally and potentially are selling. You can offset a lot of that income made on the stock portfolio by actually owning the asset of real estate and using it as write-offs. Now, there is some cons, and our job is to share and show you guys all of the information and help you guys make an informative decision. What is that con side? For the most part, a lot of real estate investors are investing themselves. This often requires lots of work involved. And then one of the key components that traditional growth assets actually, allows for is there's very little liquidity in real estate. You have to sell the asset. It's not a click of the button thing, right? So everything has its pros and cons. Now, most physicians and professionals in the past would have 70 to 90% of their capital, of their retirement planning in public markets. Things like your retirement accounts, 401ks, IRAs, ETFs, index funds, etc. Nowadays, in this industry that I'm in, I meet so many different people and so many different types of mindsets, but for the most part, they are focused on a more evolved portfolio that revolves around some of these questions. How do I create dependable income? How do I reduce volatility stress? that thing that we mentioned about illiquidity with real estate, this is true, but there is a benefit to it. Because it's less liquid, it's also less volatile. So how do we improve tax efficiencies and avoid having to sell in downturns? In these instances where we talked about market decline for public stocks and traditional portfolios, it's okay. Things go up and down, but it's not okay when that's your only option to actually get access to your capital. So sophisticated investors begin by expanding beyond traditional portfolios and actually asking their advisors what else is out there. And that's what we want all of you guys to do. Go ask what's out there. Now, you guys know your own financial situation, right? A question I have for the audience after hearing this: do you think you have too much in public markets? My answer is I think I have too little, right? I think that's something I need to change personally. I'm the whole other opposite end. I throw everything in real estate, but I'm definitely, as I'm learning and exploring, changing my perspective as well. All right. So good question for you guys to ponder on and think about. You guys don't have to answer it right now, but I do want you guys to ask that question. And again, this is very illustrative. Please do not take this as financial advice. I am not a financial advisor by any means. Elden here might be able to agree or attest or give you a different opinion. This is very illustrative, but nowadays more portfolios look like this than just having 90% in public markets. But you've probably got 40-50% there still. We're still not saying do not invest there. I highly recommend it. As you guys can see, even in this illustrative drawing, majority of it is in public markets, but have in public in real estate, in investments, in privates, and alternatives, and then having cash as well. So again, very illustrative. I just want you guys to kind of take a look, see what your thoughts are, and just open your mind. That's the most important thing. So Elden, I'm going to change over to you and give you an opportunity to speak. I've given my perspective, but we'd definitely like for you to chime in here.
Oh, absolutely. And thank you. Honestly, I love all the slides that you put up and shared with the people that decided to join us this evening. And I took a lot of notes based on information you were talking about. If you don't believe me, I have a page full of notes here because I wanted to add some emphasis on some of the things that you talked about and how things have changed. As I shared in my introduction, I've done this now for 2 decades. And over those 2 decades, times have changed significantly. Us as an ummah have changed. The environment around us has changed. I would argue most of us on this call suffer from what I personally like to call first and second generation syndrome. What do I mean by that? The first and second generation syndrome means everything that I do, I will do myself. Why? Because the life has taught me difficult lesson that I can rely on Allah subhanahu wa ta'ala than on myself. So I will do the best that I can on my own. When I meet with clients, if they are in real estate per se, that is usually there was an excess of cash sitting in a bank account. I'm going to purchase a couple of rentals and I'm going to do this myself. Because of why? I wanted to create a passive income. I wanted to create generational wealth, pass something on to my kids or my grandkids, inshallah. Sounds great. But when you get that phone call at 2 o'clock in the morning that the toilet is broken, what do you do? Who do you send? So you multiply this over the time, you multiply this over number of rental units. Quickly, the person realizes this is not as great as I thought. But we still push it. We try to persevere through it. And it's not just in the finances. So many of the first generation immigrants, even the children of first generation immigrants have learned over time to try to conquer these things, even in general investing. When I meet sometimes, especially with the younger investors, oftentimes I met with a crowd that says, hey, with all the tools that are available to me, with the Scottrade and E-Trade back in the day, I can just do this on my own. I don't need an advisor. I don't need a professional to work with. Now, some of the things that you talked about that I really wanted to kind of follow up on, you talked about the change. You talked about the dividend. pay the dividend paying stocks. 15 years ago, if you wanted to create a passive income portfolio for a non-halal investor, you could have a portfolio that's positioned primarily between government bonds, some high quality bonds, some high dividend paying stocks, and you could see a portfolio that pays anywhere between 5 to 8% on the balance. So if you're distributing 5 or 6% from your portfolio, you don't see a decline in it because of the way your portfolio is structured. However, if you take a look at since COVID, and even probably 5 years prior to COVID, the interest rate environment has not been good for those bondholders. The dividend paying rates have dropped significantly. So the game has changed. The environment is no longer the same. So having a dividend paying stock, it's just not enough anymore. I can't tell you how many times. Most recently, I was meeting with some of my clients in Dallas, and one of them just flat out asked me, Brother Elden, why don't you start a real estate investment fund? Gather a couple of Muslim investors and get it going. I said, aside from having zero free time to do this, and everything else that comes with it, but the idea came into my head, subhanAllah, people want this. People actually are starting to think outside of the box. What are some of the ways that we can additionally diversify our portfolio? Some of the other things that you talked about, the things that matter to most to my clients, these are the things that people talk to me, maintaining the lifestyle, right? It's when you retire, by the way, what is the definition of retirement? To me, what I tell my clients is definition of retirement is, by this age, I want to be financially independent from having to go to work. If you're a physician, as of this day, you no longer have to grab that white coat and head out the door to support the lifestyle that you want. That's the true definition of retirement, because physicians, yourselves, you truly never want to stop working, because to be a physician really is a calling and a passion more than anything else. So I completely understand, but it's about creating that and maintaining the lifestyle that you have. You talked about inflation. Even at the official quote unquote 3% rate that they tell us, we all know the true inflation rate is much higher. But let's go with that 3% figure. 3% over 30 years, that's more than 100%. So if you are now 30, you're going to retire in 30 years, that 120,000 you're drawing from your portfolio equates to $60,000 of spending power today. So imagine actually working and earning $60,000 today. I'm telling you, I meet with professionals who make a lot more than that, and even they can be struggling sometimes because they are not looking into cash flow engineering. They're not looking at tax awareness. They're not looking at behavioral risk management. Sequence of returns that you talked about briefly. I met clients who in 2008 had to postpone their retirement. Those who had just retired had to actually go back to work and pick up a part-time job to wait out the storm. So all of these are the things that have happened in the past. Like you said, no one is trying to scare anyone, but the history tends to repeat itself because the stock market runs in cycles. And it's not just the stock market. Any type of market runs in cycles, right? So these are normal things that we should anticipate, that we should plan towards. So making sure that we have organization around our plan is very, very important. You talked about someone netting 20,000 versus someone netting 50,000. This is so important. When I meet with a physician who's a W-2 employee, it is the worst case scenario. They work so much, and yet they can max out their 401k or 403b. That's 24,000 a year, and that's it. Because of their income, there are no other tax favorable transactions that they can do. Possibly a backdoor Roth IRA, but that's about it. So this is where creative planning, becomes more important than ever, and exploring ideas, exploring opportunities aside from just traditional stock market. like I said, say in the bottom here of this page, sophisticated investments do not replace financial planning. They increase the need for it. So my call out always, and by the way, I'm a certified retirement counselor. So my passion is to educate. I love educating my clients. I love to take the extra time and teach them about what else is out there. Teach them to think outside of the box. You can go to the next slide, by the way. I'll just tell you just a really, really short story. So I took my wife and our kids to Bosnia a couple of years ago. And while we were there, alhamdulillah, we were visiting one of the oldest mosques in Bosnia. And what's special about this mosque is it's self-sufficient. This mosque never asks for any donations, believe it or not, right? Here we are in 2026, and almost any masajid that I have ever walked into anywhere in this country always is asking for donations, because we have stopped being, we stopped planning, we stopped being forward thinking, we stopped thinking outside of the box. This masjid in Bosnia was built on top of little bazaars, little stores that have paid their rent, their lease to the masjid, to the waqif, for the last 478 years.
Wow.
And we stopped doing this. Why did we stop doing this? Because the ummah of 500 years ago was 100 years ahead thinking. They were always the visionaries who were thinking the times that are coming up. They were not thinking just about today and tomorrow. So my big call always is get together with a financial professional, make sure that you go through very comprehensive financial planning before you pull a trigger on any type of individual investment. You have to make sure, how will any investment, whether it's a real estate or Coca-Cola stock, or any ETF or passive fund, how will it fit in the total picture? And this slide here gives you a reasonable idea of what does that look like. Income, growth, tax efficiency, liquidity, legacy, all of that needs to be part of a comprehensive financial plan. So each one of these different sections plays a very, very critical role in having a successful plan. So planning now can make a significant impact in your life down the road.
100%. And I like the fact that the last thing you left off was with legacy. And it's a good question for the audience, right? Like, what truly matters more? Is it net worth or legacy? And when I think to myself, when I'm at my old age and I'm sitting with my family, right? And inshallah, Allah gives me children. I don't have any yet, but hopefully soon. And my grandchildren and so on and so forth. Hopefully, if I raise them right, they're not going to ask me, so how much money do you have? They're going to ask you things like, hey, what is it that you've done with your money? What impact did you have? What change did you make? What has your wealth done for others? We can see what it's always going to do for yourself. Absolutely. We see the nice house and the nice cars, no problem. Alhamdulillah, you've earned it, you deserve it. But we need to ask ourselves, really, what legacy is our money going to also leave? And that's why, today it wasn't just any financial advisor. We brought someone that has Sharia compliance in mind. That's why we, as a team here, we've started ethical investment opportunities, because we truly feel like, especially with everything that's going on in the world today, that's the way we're going to fight the good fight, by actually doing what we do, just a little bit more intentional. So really, today, the goal was not to talk about abandoning investments that are traditional or the normal way, the common way to do things. It's truly about building something that feels more structured, something that actually lasts. It's income oriented, right? I would rather, and I want you guys to ask yourself, would you guys rather just have $3 million, or would you rather make, $150,000 a month, knowing that's coming every month? With $3 million, we've heard all those stories. Lottery winners, what happens? I think the statistic was 90% of them go broke. But the consistency
within the first year, within the
first year, subhanallah. So that's how financial planning and just financial literacy is so important. But when I ask myself that question, I would rather have more consistent income than a larger number on an electronic checkbook. Exactly, MD. Give me 150,000 a month, a year, whatever it is. Maybe I use too big of a number, but 150,000 a year versus just $3 million sitting. Even then, I'd still take the $150,000 a year, right? So the goal we should all have is not simply more money. It should be about having something that you can have options with. Options to take back your time, options to sleep with a peace of mind, have reliable income, have family freedom, and then most of all, when you get to that point, retire with confidence and with value alignment. And the reality is that all of us here, we have physicians, we have financial experts, we have people that are in community service and human service, so many different things, right? We put in too much time for our education, for our careers, for our lives, to at the end have to stress. That's the bottom line. If we've done all that, honestly, we pretty much failed, especially in the world, in the country that we're in. And it's not that we're going to do something wrong or something, that's out of the box. It's just that we didn't think about it. So we need to start being, actually thoughtful about our actions and think about what it is that we're doing. So the question that we need to ask is, what is the point of the wealth if it creates no visible impact? Right? Those questions that we were talking about that your family might ask: what did your money build? Who did it house or shelter? What community did it improve? What values did it reinforce? Value aligned is really not a philosophy anymore. It is a retirement strategy, and a retirement strategy that works. Like when I first started in real estate in 2016, right? Rates were low. There was nothing heard. I never heard of debt free. Even the brother who had $100,000 cash, instead of buying one property cash, he would buy 3, 4, right? With financing. Now, when we look at it today, like today, I was doing an evaluation with an investor, and we were looking at 120 grand property at $1,300 rent. And we put the numbers side by side on an Excel. Fasi and MD, you guys were on that call, right? And actually, the cash on cash return was higher. And that's not even the point. The fact that it is actually safer. There is less risk in that. And these new strategies that, we were taught like is what's right, what's halal, is actually what's winning in the long term, what's actually safer. I've seen in my career in the last 10 years, many people who have sold multiple assets just to save one. They started with 6, 7, they couldn't manage, mortgage payments get missed, tenants doesn't pay. Brother Nabil, can you sell this? Can you sell that? And then they ended up with one that they ended up owning cash. I'm like, bro, I told you this when you started. Like, it's not always good to get leverage just because it sounds like what's normal. So those are the deeper questions that we need to ask. And we talked about it, right? We want passive income. We want to win back our time. And again, ignore the red and the green. This doesn't make one approach better than the other. It's just to narrate the differences. But DIY landlord is some of the things that Elden talked about. You can invest in real estate on your own. And maybe a portion of that 25 to 35% we talked about, it should still be in there. Even if it's worth the headache, there's a lot of lessons that can be learned and a lot of things that you can actually benefit from by owning some of it yourself. But you will have to deal with tenant calls, surprise repairs, operational headaches, personal exposure, and so many other things. But with our approach, the way we do it, right? And alhamdulillah, the way I've been doing it since I've started in real estate, prior to having any fund or anything like that, with both Fasi here and MD, I own real estate assets that we partnered on. And we're sharing the responsibility and the headache. And we're getting still very solid returns. But by having a structured fund, like 506Bs and 506Cs, like we have a brother here now in the webinar, Mustafa, with Veloz Capital. Alhamdulillah, this brother also has a fund management where you can invest in them and they handle the headache and they handle the responsibilities. And many other debt-free funds that we're working with and talking to, Google these companies. It's Sinbad Capital. There's Deanvest. What's the one with, what's his name? Apex Capital. That's another one. So all these, they're actually debt-free as well. So there's not one way of doing things. You guys should diversify and put it into different baskets. But the reality is these options are out there, and it would be a complete shame if we didn't even, think about it or look for it. And that's our goal, inshallah. By the end of this webinar, I hope that at minimum you guys can sit with yourselves, ask a little bit more tough questions, and then think about, what other ways there are to actually prepare for retirement, right? The goal is simply not more money, guys. We need this peace, the calmness, all of the things that we talked about. And, about that DIY landlord versus, passive, we should ask ourselves, like, hey, am I going to have the time and the energy and the effort to deal with it myself? And another question, right? A lot of us who are a little bit later into their careers, maybe we bought a property and we realized how much work it was. And we said, you know what? I'm not going to buy anymore. That one was enough. That was, not the best experience. But ask yourself, if you could invest in real estate without the headache, what would you guys have invested more? Simple as that. Now, before I continue on with the closing and whatnot, I'd like to open up for a little bit of time for you guys to ask questions, give us some feedback, your thoughts, anything that stood out. Feel free to go ahead. Dr. Shakil, I see you have your hand raised.
Yeah. I think, first of all, thank you very much. You did a very nice presentation, and Alden too. So it is a great opportunity for learning and educating each other and helping the communities and the people at large. So there's more need than we think for these type of events and understanding and literacy, financial literacy, because it is not available properly. So I'm so thankful to all of you. I'm there at your service all the time, as I told you before. I think more and more we meet individual basis, even in small groups or webinars, small meeting in the masjid, in the food shops, wherever. It is very powerful, but we have to do the effort to make it happen. So inshallah, I am very interested, and as I told both of you, I will help you inshallah soon. I have other people, and I'll have my personal funding for you guys too, for my family inshallah. So there's a lot of, because there's a lot of our life, particularly in this country, brings a lot of stress at different ages which we are not aware of. A lot of people, they just they don't expose that pain and suffering because of age or their ego or the pride, but there's a lot more than we think.
Absolutely.
So a lot more we see. uh, Part of it we see in the mosque, and most of them seen at home, which were not visible to us. So, but it is a good thing. I admire all of you and make dua for all of you. Thank you.
I mean, Jazakumullah khair. Dr. Shakil, I couldn't agree with you more. And inshallah, this was the first of inshallah, hopefully many more to come, whether in webinar, whether in-person seminars, smaller groups. As I had mentioned, financial literacy and education is a passion of mine. I truly believe that the only way we're going to change our status is by changing ourselves. We have to take the first step, and we have to, inshallah, reach out. What always kind of threw me back was the number of times I have reached out to different organizations outside of Michigan, Islamic organizations, that would just completely turn a blind eye at
Yes.
offerings of free, no cost to the masjid,
Yes.
educational seminars to help and increase the financial literacy in the ummah. And as far as you were talking about the stress, I just want to share something really quick, Nabil. My own uncle, Allahumma rahmah, he passed away a couple of years ago, but he said something that to this day, I will never forget this as long as I live. He said, anyone who thinks that living in the United States is easy and that this is the land of dreams, I challenge him to lose his job and his health for 3 months and see what happens.
100%.
Yes, I know. I know by my own experience. I don't need anybody because
Yes,
what
yes,
I went through myself, I don't want to share things at this stage. But I know that I have to say one thing, which is amazing. Allah said in Quran that every Muslim brother and sister is each other's wali. Means we are responsible. Subhanallah. I am responsible for all people here, and you are all responsible for me.
That's right.
Similarly, Allah says the non-Muslims, they are also wali for each other. They also help each other.
yes,
So it is our legal and moral and divine duty to help people financially. In the masajid, when we talk about money and financial, it means they want to kick us out of the masjid. Get out of here. They don't understand that this is the top priority.
Yes,
It's the top priority that helps to come to the masjid and do salat and read Quran. So, as I said, I have no words to say thank you to all of you.
absolutely. Absolutely. Anyone else here with any comments or questions? Brother Mustafa, go ahead.
Hey, assalamu alaikum everyone. Just jumping off what Dr. Shakil had mentioned, I want to echo, the great talk, really very informative. Really appreciate everything that you've said. But I think sometimes, I feel like talk isn't enough and it's about actually taking action. So with that in mind, we've obviously learned a lot today. What are the next steps if we're on this call, if we're looking to invest? Walk us through the process if you don't mind, Brother Nabil.
Absolutely. So, next step at the end of the day, everyone is in a different situation. What I'd like for you guys to do is reach out to, me, Fossey, or Eldon to schedule a one-on-one call. Tell us your situation, what you're working with, and we'll give you our advice and our solution. We here at Fajr Fund, we're not open as of right now, but are launching, the solution to some of the problems that we talked about. We're putting together an SEC regulated fund. It's a 506c for accredited investors. You get to invest with us, alongside us, with brothers and sisters that are like-minded here locally in the Detroit community. Now, why Detroit? Because one, we see the impact that it makes. Each property is uplifting the community. We see that we can get healthy returns. We can be debt free. And most importantly, we do have the vertical that's here locally. So we have one solution. We're not the only solution. Once we know your situation better, we tell you. As another important, just comment here is that some of us think that the only way to invest in real estate is by saving up cash. That is not true at all. We've done a 506B in the past, and we are approved through American IRA. And I'm sure Eldon can guide us more on how we can do this. But people can invest through their retirement accounts into real estate as well. So that option is there. Next step would be let's schedule a one-on-one call and see what works best for you guys.
Thank you.
No problem. All right.
Nabil, before you close it off, I just wanted to thank you and thank everyone on this call. And honestly, I wanted to just finish the conversation with the hadith from Tirmidhi, where Sallallahu Alaihi Wasallam said that each man on the day of judgment will be asked about how do we earn our money and what do we do with it. So this is not something to be taken lightly.
Yes.
This is not something we should take lightly, because we will be judged for what we did and how we earned it. And this is what separates a Muslim from everyone else.
Absolutely.
The most amazing part of my journey for me has been seeing that halal portfolios, even during the 2008 financial crisis, were the least impacted by the drops.
Yes.
Because they were not invested in the financial institutions. They were not tied to the mortgage lenders and mortgage banks.
Yes. What's crazy, I just saw a clip. It was on Instagram by Curate Capital. And it was basically, they made a little video. It was meant to be educational, but funny, where it put side by side. It was like, I think S&P 500 versus like a Sharia portfolio. and it was showing over the years how Sharia portfolio actually did better than the S&P 500,
Yes.
right?
Yes.
Alhamdulillah.
Any average Sharia compliant portfolio has outperformed the S&P 500. Absolutely. So that was the biggest thing. The second most beautiful part that happened to me in my career progression was when I started getting non-Muslim clients who wanted
Yeah.
Sharia compliant investing, because they understood the value of thinking outside of the box and actually being purposeful with their investing.
Yeah. There was a situation, where I was actually with a group of friends, and one person was saying, like, oh man, because of the Iran war, this stock went up. I forgot what he said. And he's like, man, my stocks are doing so well. And then my other friend responded, bro, you do understand that stock is like selling defense weapons and stuff, right? And they're like, oh, really? Damn, I didn't know that. I just thought it was a good stock. So like, these are things that, until we ask questions, we don't realize. Like, what are we making money off of?
Correct.
That's so important. It's so powerful. Yeah.
No, absolutely. And now more than ever, with everything that's going on around the world between Gaza and Iran and Syria and Yemen and anywhere in the Muslim world, what we do with our money matters more than we have ever seen in the past.
100%. 100%. So again, I want to thank all of you guys, Elden, Brother Fasi, Mustafa, Dr. Miraj, Dr. Afaq, MD, anyone else who's joined in and left out, Mustaq, Yahya. I hope truly that you guys did benefit from it. Like Elden said, our goal is to continuously do this. God willing, we're going to, do at once a month minimum on webinar, and we're planning on doing a masajid tour here locally. So, next time we have it, please make sure to join again and invite other audiences and other people as well. Brother Fasi, did you raise your hand?
Yeah, I was gonna ask as a parting gift. I think
Yes.
what we're gonna do is, to all the attendees, we do have something called as a private equity handbook, which is basically a toolkit that gives you an understanding on basic terminologies and basic understandings of what people in the financial industry talk about and how to gauge those. And I think it's made very curatedly to make sure that you understand these terminologies and have some knowledge on how to essentially gauge when people are talking about it. So that will be shared with all the attendees.
Jazakallah. Thank you for putting that together. All right, everyone. Again, assalamu alaikum, and see you guys on the next one.
Assalamu alaikum.
Bye-bye.
Thank you.